What VA loans can be used for. A lot of people get this wrong. All right. See, guys, I'm looking at the camera. Here we go. So, if those who don't know me, I am Bernard Diggs. I have coached and trained real estate agents for over 10 years straight. I've been in real estate for over 14 years. Got into it early age as like more of an intern in like 2006, if you could believe that, Tim. Dibbled and dabbled with it, but really got serious in 2012 and went full bore. I've also a military vet myself. I did 7 years active duty and 13 years as a reservist, as a rescue swimmer for the United States Navy. Not to brag, but the Navy's the best for those who think differently. Shout out to my Navy people, and shout out to the rescue swimmers and search and rescue combat out there as well. Now, I always share that reserve part because those who may not know the National Navy Reserves, basically it's 2 weeks. Typically, it's 2 weeks a year that you go active duty and 2 days a month. Typically, you can get mobilized. Those who are in the reserves that understand it, you can get mobilized, activate yourself. There's a lot of different things out there, but that's pretty much it. So when I wasn't working those 2 days a month in the military, I was working real estate. There you go. And so you'll hear overlapping stories a lot when it comes to the VA working with veterans and that. Now, enough about me. I got it over with, Tim. So, enough about me. You came to hear about the VA and the VA benefits and the changes in 2026, and there has been a decent amount of changes that benefits yourself and veterans that are out there, and veteran spouses. What? If you're a veteran spouse or a surviving spouse, we are going to be going into that as well. So I look forward to this. Now, if you're a real estate agent, I'll speak to you guys first, my faves, besides the veterans. Take this information as much as possible. You'll get like the slideshow. We have one for you guys, like that guys are clip notes, and you'll get like a PDF. But use this information to really, really educate VA buyers out there and sellers. There are so much information about the VA and the VA loans. And most of the time, veterans do not know their benefit. It's not like they're in the military and every day they're thinking of buying a house or two or three. They're not a lot of them are. And by the time they do, they may not know their benefit. I always share this story. The gentleman doesn't mind me sharing it. He was active duty, and we were taking him and his wife out to look for a home, and they were pre-approved. He didn't even know, as an active duty member, that he could use his VA loan. He thought that was for veterans, because when you're in the military, if you say veteran, that's somebody who's already served in our minds. So when he heard veteran loan, he was 22 years old. When he heard veteran loan, he thought that was for people. Once you get out, you can use that benefit. He didn't know you can use it while you're in. So you never know. And most of them won't ask. So it's so good that you take any tidbits that you hear today, and you can really, really educate the VA buyer. Yes, there's one website I want you guys to write down that's really good to get information from. I do it all the time. It is www.google.com. That's right, google.com. Google. It's a great reference just to do a quick reference check for anything. Of course, ChatGPT, different things online, but there are so much gray area in the VA with the VA loan that if you ask it a certain way, it may not get to the detail of your customer. So as you're working with customers and giving this information, if there's ever a time where you're like, I need to bounce something off of Bernard or whatever, give me a call and we'll work through it. I work with a bunch of lenders. I'm not a loan officer, and nor do I work for the VA. I'm just passionate about VA. I'm a veteran myself, and it's one of our niches in what we train to educate our realtors and VA buyers and sellers on their options out there. So without further ado, the first thing I want to talk about is who qualifies for a VA loan. If you served active duty 90 days during wartime or 181 days during peacetime. We are in wartime, so if anyone served active duty 90 days at any point in their life, that is one of the requirements for being eligible for VA loan. A veteran meeting service length requirements, National Guard or reserves. Let's say you were in the reserves, but you never were activated. If you just did the 2 days a month and 2 weeks a year, if you did that for 6 years, you can use your VA loan. You're eligible. Certain survivor spouses also can use the VA loan. We'll talk about that a little bit later. And then you must obtain a certificate of eligibility, which you can get on the VA website. So those are who are eligible. Now, a lot of times people get words confused. Being approved for a VA loan is different than being eligible to use it. So sometimes I've heard a lender actually say this before in my career. They said, "Oh, the VA, you're not eligible for the VA loan because of your credit score." This is false information. So the VA doesn't care about your credit. I mean, they care about the veteran, but they don't care about your credit. They said you serve, therefore you're eligible to use the benefit of the veteran. Now, the banks do care about your credit, and maybe your wife. They care about your credit. So try to keep your credit scores in a good place, because the better your credit score is, of course, the more benefits and more options you will have. However, each lending company has their own requirements of what they will approve you or not. I've seen lenders go as low as 580 to 550, depending on what's causing the 550. And of course, every lender can do a 650, 660 credit score for the most part for a veteran for VA loans, as long as it's depending on what's causing the 660, as long as no recent lates or nothing like that. So that's who's eligible for it. Now, also a word that people get confused, eligibility versus entitlement. Eligibility is, in a nutshell, are you allowed to even have a VA loan? Like, did you serve? That's what that is in a nutshell. Entitlement, though, is the dollar amount that's guaranteed on the VA side on your behalf. So there are two different types of entitlements: full entitlement and partial entitlement. Full entitlement, there is no newsflash for 2026. I think this change happened in 2024, I believe, or 2025. In full entitlement, the veteran is allowed to use there's no limit. So if they want to use a VA loan on a $1.2 million house, they actually can, as long as they qualify with the local lending company that they're using. So there is no limit on a full entitlement. Now, partial entitlement matters if you still owe on a VA loan. So let's say you use your VA loan, but you still have one out there, you only get partial entitlement. And to kind of explain that a little bit more, the full entitlement can be reused a lot. To date, I've used my VA 9 times in my lifetime to this date. Every time you purchase a property with VA, if you were to sell that property and there is no deficit as far as the debt, like there's not a pre-foreclosure or foreclosure, I should say, or a short sale, then the limit is paid and you get to use it again, no limit attached at all. But let's say that VA buyer or seller had to rent the home out because it's just not ready to sell yet because of the market. They still can use their VA loan at the same time. I know that's a myth, right? That people didn't know. They can use it at the same time, but they do fall under the partial entitlement, which does have a loan limit before you can do it without putting any money down. Again, we're talking about full entitlement versus partial entitlement. The fees that come on the VA loan, there is no PMI. That's the good news. At all. PMI is primary mortgage insurance, like what FHA gets. Certain conventional loans will have PMI. There is none on a VA loan. However, there is another type of fee, which is called the VA funding fee. If it's your first time using the VA, it's 2.15% that will be attached to the loan typically. This is attached to the loan. Or if it's your second use, it would be 3.3%. Now, that's when you're putting zero down. If you put 10% down, that fee drops from 3.3 or 2.15 to 1.25%. Super important to know that. And even as a real estate agent, I think there's some loan officers on here as well. Um, some people, certain loan officers may not know this because they haven't came across enough examples in their career yet. So I speak on behalf of more of the VA. So as you're an agent, it's not that your job to school the lender or the loan officer. There's great loan officers out there that really may not know this because maybe they deal with more 55 plus community or conventional loans or FHA loans. But the VA loan, if you have a lender or loan officer who deals like a predominant, VA clientele, then you will see that they understand that if they put the down payment down. So if you ever have a veteran and they're putting down a down payment, just make sure that the loan officer and the veteran knows that if it's 10%, the VA funding fee drops. If it's 5 to like 9.99%, which is the exact number, it drops to 1.5, which saves them a lot of money. And again, there's no PMI. Now, in 2026, we're going to revamp this at the end. The changes for the funding fee, super important. So let's just say that the funding fee, 3.3% of a $400,000 house, that's roughly $12,000 to $13,000. That's what will be attached. Well, now in 2026, the change is that funding fee is now tax deductible, kind of like PMI. So it will be under a Schedule A. And so you can actually write that. It's a good write-off now for the funding fee. And I did not know that until I was researching this for this class. So I didn't know that change happened. So that's a good thing for our veterans that they can actually write that off. They should have been did that, by the way, but that was good. It's a good change. All right, down payments. Again, there's zero down payment for a full entitlement. That does not mean if you can't qualify for the loan. So if you go, man, I don't have to pay nothing down on that $1 million house. Well, as long as you qualify for zero down payment with the lender, the debt to income ratio, yeah, you don't have to put a down payment on full entitlement at all. So what the benefit of that, there's pros and cons with that. The biggest pro is that they get an asset, or what could essentially be an asset later if they buy another one, for zero money down. That's one of the biggest benefits for VA, I think, which I love teaching this class because the biggest homeless population is veterans. And yet we can buy homes with zero money down. So I think that's a pretty cool entitlement when it's full entitlement. Down payment is only required if partial entitlement exists, and you need to get it. You need to do it to qualify for the loan. What VA loans can be used for? A lot of people get this wrong. So we're going to really get into this a little bit on this one. It can be used for, of course, a single family home, townhomes, and it can also be used for condos. Yes. So one single family home at a time. Typically, if you're a VA veteran and you have a home today and you have partial entitlement left, like meaning you didn't have a short sale pre-foreclosure, so you have just maybe partial assignment because you have to rent that home out, you can use your VA at the same time. I've seen it personally up to 3 times at one time. It just, again, you got to make sure you qualify. There are some qualifications there that matters with the local lender, but the VA has given you that entitlement to use it. Townhomes, condos that are VA approved, because some condos don't approve VA, you can buy up to 4 multifamily units at one time, as long as you intend to stay in one of those units. So let's just say that you were in Florida and you have 8 units, and let's say they were 200,000 a piece, and you qualify for that. Normally you would see something like this in Palm Coast, Florida. They have a lot of duplexes. Shout out to Palm Coast if anybody's watching this from Palm Coast, because they have a lot of duplexes, a lot of retirement community, a lot of veterans retire and go live in Palm Coast. Very chill, very relaxed. And if this video ever go viral, people in Palm Coast probably be mad at me. They want to keep it slow, low key, you know. But it's a really good retirement place for veterans, and you'll see duplexes, quadplexes, multi-unit condos for sale. Typically, let's say they're 200,000 a piece. That veteran can literally buy all four as long as their income says they can, with no down payment. Four of them, as long as they intend to stay in one. That's pretty cool. Because for the veteran, you just bought three other properties. How many of you would buy three properties if you had to put nothing down and put renters in it right away? And our 25-year-old vets could, at the end of 20 years, I don't even count 30 years on the loan. Let's say 20 years on that loan, they could be looking at what I believe could be better than a 401k, depending on how much you put in there. It's a really good deal for someone. So you imagine you're 25 and you look up one day, you guys, if you can believe this, you're 45 years old and you've been renting out three condos that you never lived in and you put no money down. And then at 45 years old, you decide, you know what? They're either paid off or I'm going to sell them. Either way, if they're paid off, you're still sitting on an asset and you could sell it at any time you want. And if they're not, you can go sell it right there. Let's assume that there was, even if it stayed the same price, 200,000 throughout 20 years, doubtfully in Florida. But even if it stayed the same, it's still $600,000 cash out. The VA has what we call life-changing events. I want to make sure that if you're working with loan officers, don't fault them if they don't know this, because I've seen this before and I used to judge them. I don't judge them now because it's so many different ways. If you never came across this on your file, you wouldn't know this. It's not something that's easily to look up. You almost have to type it in so specific that, because a life-changing event can be, I got married. That's a life-changing event. I got divorced. My daughter went out to college and we want to downsize. The railroad tracks is driving me crazy and I have a disability that it's affecting. I broke my leg. I lost my job. I got a job. I'm making more money. We can afford more. These are all life-changing events. And the VA considers the life-changing event, especially with the veteran, because they can also get orders somewhere else, right? So if they have a life-changing event, the VA, let's say they lived in those 4 units or lived in one of those units and they was a 2-bedroom and now they're having a baby on the way, or they got married, or they're making a little bit more money and they want to buy a 3-bedroom. They could go out and buy another 4 units, which would give them 8 total, as long as they intend on staying in one of the units. With that purpose, they can go out and buy another 4 units. Let's just say the same price for $800,000, and they can do it, depending on the bank, with no down payment. That's 8 total units that they would have, and let's just say that was in a 2-year span. That's how cool the VA loan benefit is. So if I was 25 years old and I went out and I got a 1-bedroom and I was able to, let's say I was an E6, E7 or an officer in the military, made pretty decent money with no debt, and I was able to afford $800,000 with a good interest rate, or whatever 4 units will give you at the amount that you make currently. Because you don't have to get 4, you could get 2, you can get 3, just up to 4. You can go and live in that 1-bedroom instead of apartment. I would live in that 1-bedroom and I would rent out the other 3. And I'm pretty sure I got some good agents on here that would love to work with you. So shout out to the good agents, and then I can, after a year, let's say the relationship got serious and you got married or just got a girlfriend, boyfriend, whatever, or you decided that you wanted to upgrade to a 2-bedroom, you wanted a home office or something, you can go out and buy 4 more within a year or 2. because it's called a life-changing event. You could do it in 6 months technically. The VA just looks at it and they go, okay, you can go up to this because the partial limit goes up to $832,000, which is why I'm using that number as an example, which is also one of the changes this year. So how cool is that for our veterans that they could be building wealth in their early 20s or 30s or 40s, guys, if you're there, or 50s. I mean, this formula works for our benefit as veterans and veteran spouses and surviving spouses of the veteran. It's incredible how you can end up having so much. Now, not every veteran may want that, but to know that this is part of the options that you have is more powerful than anything. So I'm going to keep going. Any questions on regards of anything I just said or went over as we just take a quick break? I want to make sure I didn't lose anyone on that at all. So I'll just check the chat real quick. These are called lender overlays, PMI, mortgage insurance. Yeah. What did you say, drop? I love Joyce. She said, just like she sounds. What'd you say, drop? The VA funding fee drops once you put down payment up to 10% down would drop instead of a 3.3, it drops down to 1.25. I got paid $68 to buy a quad. Oh, I don't know what that means, but sure. All right. Roderick Wilson, VA life-changing event. Yep. Good job. Appreciate you, Roderick. Yes, I'm a good agent in Central Florida. There you go, Tony. Tony's like, man, let me take over this thing. All right, cool. Good agent in Central Florida. You are, Tony. You're here. I always say that because any agent that gets further educated on anything in our field, I think that's a pretty decent agent, as you will always add to your repertoire. And it's only going to give you that much more leverage out there in the industry. All right, cool. Got all the chats. All right, we're going to keep going, guys. We're there. We're halfway done. You can use your VA on new construction. It's just the builder itself has to have VA requirements. So that's something we're going to do. Like, I could do a whole class on that. I think next month, because I call it Freedom Month, is all of our Thursday webinars will be about the VA, and we're going to dive in depth on how to use these benefits. Like with new construction, that's going to be one of our main topics on when a VA buyer is working either with new construction like a Lennar or DR Horton, or they just got land and they want to build the home themselves with a investor or a builder. All right. Surviving spouse. I know I got a few on here on this call today because I got hit up about this, and this is one of my questions I get a lot. A surviving spouse, if you're unremarried, like means you didn't marry again, you can use, and the veteran passed away, either active duty or they passed away from a military disability. The unmarried spouse, unremarried spouse can use the VA loan the exact same way the veteran can. So all of those examples I used before, you can do the same as well. You need a certificate of eligibility, which you get on the VA website, and to use the VA loans benefits themselves. So that's the one thing you do need, a certificate of eligibility. Because if you're sitting out there, you're a surviving spouse and you haven't remarried, you're probably like, okay, where do I start? Start with the certificate of eligibility. A lender also can help you get that as well. But you go on the VA website or type in Google how to get COE, and it'll literally walk you right through it. And you're able to apply for it and get it at that point. Now, I got some more news for you, some changes. Woohoo! We love changes. Normally, if it's a change in the VA, normally it's for the benefit of the veteran. Certain remarriages, exceptions apply. So if you got remarried, like one of the exceptions is if you got remarried and you're over 57, you could possibly qualify for survivor spouse. So if you're over 57 and got remarried after 57, you could possibly qualify for a surviving spouse. So don't close the door on these life-changing events in these gray areas with the VA. Always get with the local VA rep or vendor and make sure that you have that your story and and ask additional questions too, as well, especially because disability brings in another avenue of that gray area that can make you be able to get it as a surviving spouse. There's a form, it's called VA Form 261817. That is the form that you would use to apply for surviving spouse entitlement for VA loan. Now, you do have to, they don't just give loans out. You do have to have like income, a job, same thing that the lender will qualify any buyer for. You do have to get that too, but you do need that certificate of eligibility as well. All right. Number 8, we got 2 more. Disability benefits. I'm literally going to do a class on this whole thing. So I'm going to go over like a quick, brief overview. This one is a little bit, it's not so much, it's more for the military people, but it's good for real estate agents and loan officers to know. I'm pretty sure most loan officers may know this one. However, 100% disability rating waives the funding fee. So that 3.3%, it waives the funding fee. In some states, like the state of Florida, you don't have to pay property taxes if you have 100% disability. So again, in some states, like the state of Florida, you don't have to pay property taxes. If you're watching this and you're in a different state, just check with your local government rules and look it up. But in Florida, if you are in a different state and you're 100% disability, I know a bunch of agents right here that would love to work with you to get you to move to Florida because 1, we're tax-free state, and 2, we don't pay property taxes when you're 100% disabled vet. If you're a spouse of a 100% disabled vet and they pass away due to some ailment of that disability, that's a gray area too. I could talk offline about. However, you are entitled to that benefit as well. It's pretty cool. And the disability benefit, also pretty cool. So on top of, I want you guys, I should just show you what that looks like as far as like even just getting qualified. Let me see if I got something here. It's a little off script, Tim, but I'm going to see if I could show you guys what that looks like when it comes to like a payment. Okay, so you guys see the screen right here. If you're on your phone and you don't see it, you got to swipe left, I believe. And if you see the screen right here, you see $400,000 home, a VA again, if it's full entitlement, typically it's 0 down payment. Zip code on Zillow doesn't matter, but we'll just put 32256. Let's say today's current interest rate is 6.3. No PMI. Bop. Okay. So on a $400,000 home with, I'm going to take the HOA out just because never mind, they require it. So let's say $100 a month for HOA. Homeowners insurance, 9. We're going to put it at 1,000 just to be on the safe side. And about 1.2 property taxes. Okay. So their monthly payment on a $400,000 house would be in this middle number right here, $3,235. Again, give or take variables. Now, with that at a 6.34 interest rate that we're using. The cool part about it is a military vet doesn't pay, that disabled, look how much it dropped. Look how much $600 a month it dropped if they're a 100% disabled vet. I've actually seen people be a 100% disabled vet. They had already purchased their home and they did not know in the state of Florida, because maybe they moved or maybe they wasn't educated. They did not know the property taxes was to be waived. So, because it's up to them to go down to the local tax office and show them the disability paperwork so they don't have to ever pay property taxes. And by the way, they don't have to ever pay on their primary resident. Make sure we're clear for those who are rewatching. Primary residence for the rest of their life. Now, how cool is that? That's a savings in itself. I want to just break it down. Now, if you were like, let's say you were working with a builder, I want to show you this right here. and they were buying, or you negotiated them to buy down the interest rate to like 4.9. Look how much drop from a buy down interest rate for VA down. It dropped almost $1,000 on your monthly payment just because you're a 100% disabled vet and you bought the interest rate down. And there's no VA funding fee. So you also save on a $400,000 house. That would be roughly 13,000 some change. You also save $13,000 on that too as well. And there's no catch, by the way, to this. This is the VA. That's how, I mean, I guess the catch would be you got a disability. But other than that, at least you get the benefit. Any questions on that disability part? Huge, huge, and more huge. Oh, I know. Okay, I got a question. I got a question that you're thinking of but not asking. What if you are married to someone who is also a VA? I know that's what you were thinking. I know that's what you were thinking. Like, what if you were married to a veteran who could use a VA? Um, really cool scenario, by the way. If you love your spouse. If you love your spouse, it's a really cool scenario because remember that condo unit I was like you could buy up to four? If you are a veteran married to a veteran, you guys both have that VA entitlement, you can buy up to six condo units, up to six condo units. That's a change too. Isn't that pretty cool? I've seen veterans use with like who are married to veterans use like up to like three or four houses, at a time, like having it at the same time because they qualify because of their jobs and stuff. Really cool concept there. So, um, now for 2026, here are the changes. And if you're not writing down, you'll get these notes that I'm literally reading off of. The funding fee is now tax deductible. That was not always the case. That happened in 2026. The loan limit, the partial loan limit, remember, if it's full entitlement, the veteran can go up to as much as they qualify for. For the partial entitlement, meaning they already have something tied up, the loan limit has increased to 832,750. 832,750. That's how much house they can buy that's on top of what they already potentially use. And that's the average across the nation. In certain areas, like the state of California, they can go up to 1.2 million for the partial. There is something called the VASP program. It closed May of, most of you may not know what that is, but it closed and it was replaced by permanently. It's closed May of 2025. And it was replaced by the VA partial claim program for foreclosure prevention. So the VA guarantees a loan, and they don't want, obviously, most people don't want to go through a foreclosure. And so there are things, if you're a VA person and you are in a situation, we work with you guys a lot, where if it's a pre-foreclosure or a short sale scenario, there is a lot of options for you. I cannot go over all those options now today, but in July, as we do these Thursdays, I'm going to be breaking down some of those options for people. I think that's the last Thursday class that we do, is talk about short sales and pre-foreclosure. There's no reason to be a VA person and go through a full foreclosure. There are so many options when it comes to the short sale pre-foreclosure process, and so many different ways you can claim, write things off, do loan modifications. I've seen so many things out there that it's almost like it would be a little foolish to just allow it to be foreclosed on, honestly. There's so much for veterans. I don't even know if it's like that for any other loan out there, like it is for the VA. And VA OIG found veterans still owed retroactive funding fee refunds tied to disability rating changes. Tell agents to check with past clients. So you'll love this. There's two changes. So the VA funding fee, if they purchase in 2026 and they were charged the VA funding fee, they will get reimbursed. So if they put that into the loan at $13,000, like we were talking about, that funding fee, they will get that reimbursed. That's pretty cool as well. So they get that reimbursed to them. Also, when it comes to the property taxes, if you're 100% disabled vet, when you purchase the property, what will happen is you have to, the lender, if it's a new construction for sure, the lender will have to put the taxes, at least for those months or 3 months. I can't remember how many months, but they have to put enough taxes on there. But you will be reimbursed as soon as you close on that property. You go down to your local state tax in the state of Florida for this one, or any state that allows 100% property tax waived. You go down there, they will reimburse you for the property taxes that you currently already paid. Your lender will reimburse you for that. So that's another change as well. Any questions on the changes or anything with VA as what we covered? I'm going to check the chat right now just to see is anything I missed. Yeah. All right. Mr. Wilson said you can actually call the tax assessor, office instead of visiting the office. They will send you the proper documentation to claim your homestead exemption. Yes, they will. They sure will. That's my guy. Great information. I'm MRP certified. That's what I'm talking about, and have worked with many buyers and sellers. My team as a VA specialist as well. That's awesome. That's great. I love that. Any other questions out there in regards to the VA and the stuff that we went over? I would say my favorite things, biasly and unbiasedly a little bit, is the condo units and the duplexes, being able to reuse it multiple times at the same time. And I would say the disability rating is huge. That's a huge savings that most vets, if you're a vet on here and you're uncertain about getting disability, you can also reach out to me. I highly recommend going through the process. Changed my life, so one of the best benefits I ever had. My daughter just got accepted to UCLA this year, and literally the VA is covering her. The Cal Vet is covering her tuition and room and board, and the VA is paying her a stipend of almost $1,583, almost $1,600 a month, while she's in college. I mean, it's a great benefit to you, your spouse, your kids. So I encourage you to do that as well. Appreciate that, Tony. Are you sending us as a PDF, this information? Yes, I am. Carol Morgan had a question.
Yes, good morning. I have one question on the buying of, if you bought 4 units the first time and then you buy the other 4 the second time. You're residing in one of them. So you're going to have to move to the second group of 4 and reside in that for them to finance, correct?
Yeah, say that one more time just to make sure I got it.
Okay. You've got 4 units that they've bought, and they're residing in one of them.
Yep.
Okay, it's a requirement. So they buy the next 4. Are they going to have to reside in one of those 4?
Correct.
How does the fallback fall into place on the first 4 if they're not residing in that one?
They just have to rent that one out.
Okay.
Or sell it, of course, or sell it.
All right. Okay.
Yep.
I just wanted to know if there was some kind of a little catch there.
No, no one does it either. That's the crazy part. Like it's such a rare to find someone that does it. I always try to preach this one because it's like, if somebody would have told me that I bought my first house at 21, I got lucky. Met a realtor who knew her stuff, and she really helped me. She actually obviously encouraged me to get into real estate. And she was like, "Why are you renting when you can just get a house with no money down?" I was like, I never bought a house, right? And I came from a family who didn't own properties. So I was like, what do you mean? What's the catch? And I was like doing all this. And all she kind of showed me in my ignorance, 21-year-old self, was I had no down payment versus the money. The rent was being thrown away, and this has equity. And so I moved into this house. It was called a doll house. It was like really small, 900 square feet home, 2 bedroom, 2 bath. and I bought it for $84,000 in Jacksonville, and it was right pre-recession, so like the recession hadn't happened yet, and so the that house ended up being like 130,000. So I lived in for like 8 months, and I was like, wait, she was like, you could sell that house and make money. I'm like, how much money? She's like 40,000 now to a 21-year-old in the military with no kids, right? I can make $40,000 almost. I I'm selling this house. So I sold the house, and I tell the story a lot. You guys may have heard it if you heard me. I took the money and I spent it in 1 week in Orlando and Disney. I swear to you. It's like I looked up after like seven, like I drove down to Disney. And when I say I drove, I don't know what I was thinking. When I was young, 21, I thought I was going to be a rapper or something, right? So it was like in my mind, I was like, I'm going to drive down to Orlando in a stretch limousine and take my friends and pay for everything because I got all this money. I thought I was rich. Anyway, that's a story of don't spend your equity that way, not in Disney. Yeah, right, there you go. But yeah, that's all right. Let's see. Roger said you can also refinance the first 4 unit building using a conventional loan, which will replenish you. Oh, that's so good, Rod. I ain't gonna lie, I gotta give you a hug on that one. That's good. Yes, you sure can. This is a I was going to get into that next month about refinances, but you bring up, since you brought it up, yeah, you can refinance those other ones into a conventional loan, like Roderick said in the chat, which will replenish your VA entitlement. Then you can go buy the second unit. You'll have basically your full entitlement again. You can buy your second unit again with no money down as well. There's a lot of options with the VA, as you could tell. We're going to be going in these webinars on Thursdays are free. We don't care what brokerage you're with at all. I'm licensed in 2 states with 2 different completely brokers. These trainings are literally just to help our agents help agents. And when we do the military ones, we invite military. So I know there's military people on this call that are not real estate agents. We appreciate you guys' service again. My prayer and hopes that you guys enjoy next week, especially as we celebrate America and we celebrate the Independence Day of our country. And for those who serve, who are agents and spouses or related to them, we appreciate every last one. And I say that not because we have to say it. I really mean it. I went to the desert 4 times and served when the thing popped off with September 11th. Right after that, I was like shipped as a rescue swimmer out there to the desert. It's the best bonds I've ever created was in the military. I would say the second would be in real estate, but the first one is definitely the military. So I really do appreciate you guys. And when I meet a military person, I think we think the same way. You're like my family right away. So appreciate you guys being on the call. If you have any questions, I'm gonna leave my number here, and you can call me only about VA. No, I'm just, you can call me or text me. That's my personal cell. And if you ever need anything, like if you just want to bounce it off, I don't care where you're at in the US, if you have a VA client, it happens. Even top producing agents, they will call me and ask me, hey, let me run this by you. What you think? I'll literally give you that advice and you can move on. So appreciate you guys. Come to these Thursday classes starting in next week. I'm so sorry. So sorry, not next week, not next Thursday, the following Thursday, in 2 weeks from now. And we'll be doing different segments of how to use that VA and get that VA benefit for each one of those categories. We're going to break it down and talk about how to niche VA, because VA makes up 27% of the loans that are done in the state of Florida. If you're in North Florida, just one builder, it made up 41% of new construction loans. So definitely, you're going to come across veterans if you're in North Florida for sure, because it's 3 major bases. But in the state of Florida and around in your business, you're going to come across them probably 1 every 4 buyers who either have a spouse or ex-military or active duty. So how can I get an email? France Rodriguez. So Cool Beans, you are on this call. You are automatically part of our email chain now. and you'll get the reminders, friendly reminders. You just got to register for the classes and come. But if you ever like didn't get something, just text me again and or email me and say, hey, I didn't get that link to that class. But we always try to give enough advance notice on what we're teaching and what we're going over. We don't always teach on VA. We have other people come in and teach on Thursdays as well, experts and stuff. But for the month of July, we decided that we should just do all these VA. I've got really hit up a lot about that lately and want to invite more veterans. If you want to invite veterans to these classes, you can. They're free. The only person who may take your customer is Tony because he gives out his information. No, I'm just joking, Tony. In Central Florida. But other than that, you're pretty much safe. Your clients are safe. This is not a like steal you from your brokerage or steal your client's platform. This is just education platform for everybody to feel safe to come to and learn something. Okay. Appreciate you guys. See you guys on the other side. Someone just shouted out my book, and I really appreciate that. I wrote a book, 100K in 16 weeks in real estate. I believe Megan's going to send out a QR code to get that if you want it. I definitely encourage you to read it and let you guys use it as a tool to build your business and to make it. We've seen it happen a lot. So use the tool to hit it. Appreciate you guys. I'll see you guys on the other side.